Big oil getting bigger today with big deals. ConocoPhillips wants to buy Marathon Oil. Coming up on Business Matters. Good afternoon, and thank you very much for being here with me today. I'm your host, Don Ma. Let's start off with markets. U.S. stocks today fell further amid gains in Treasury yields, as well as concern over timing and potential scale of possible interest rate cuts from the Federal Reserve. And the Dow fell to its lowest level in nearly a month here, while rate-sensitive utilities were among S&P 500 sectors with the biggest declines. So the yield on the benchmark 10-year U.S. Treasury note hit 4-week highs at 4.6%. You know, sticky inflation and hawkish comments from central bankers now are forcing traders to temper down rate cut expectations to only one by November or December. Okay, ConocoPhillips is fueling the consolidation fever in the oil and gas industry. The company has agreed to buy Marathon Oil in an all-stock deal valued at $17 billion. Now, the price tag is actually closer to about $22 billion, including debt that will be taken on. This is the latest acquisition announcement. Before last year, ExxonMobil said it would buy Denbury Resources and Pioneer Natural Resources, as well as Chevron said it would buy Hess. The merger activity has attracted increased antitrust scrutiny from the FTC. And the Biden administration has as well stepped up antitrust reviews for energy companies. The deal also still needs approval from Marathon Oil shareholders. It is expected to close in the fourth quarter. And as well, an update now on the Chevron-Hess merger. Preliminary results show Hess shareholders have signed off on the $53 billion sale. This brings Chevron closer to oil production in Guyana, South America. The deal, though, still requires regulatory approval, of course, and it must face a lengthy arbitration with a rival Exxon and CNOOC, who is Hess's partner in Guyana. A dispute was filed claiming the companies have the right to refuse any sale of Hess's Guyana assets. Exxon has not expressed interest in bidding for all of Hess, but has not ruled out the potential bid for Hess's assets in Guyana. The arbitration could push the deal's closing date into 2025. Now, for further insight on the Hess-Chevron deal, and of course, ConocoPhillips bid for Marathon Oil, here's Karen Daini-Kiley. Karen, thank you so much for your time this afternoon. A couple things happening here. Let me get your thoughts. Anything that you have overall on the ConocoPhillips bid for Marathon Oil?
Sure, absolutely. So yeah, Marathon is going to add assets, primarily in the lower 48, so the U.S. onshore, and a lot of them overlap with areas that Conoco already operates, such as the Bakken Shale, the Permian Basin, and the Eagle Ford Shale. So they should, be able to improve economies of scale, lower their cost structures in those areas, et cetera. It also comes with an asset offshore Equatorial Guinea, an LNG plant, or liquefied natural gas plant. And Conoco is building up its LNG portfolio. They have, interest in production assets around the globe. They have, regasification facility, liquefaction capacity. And so this is a nice slot in on the production side for LNG as well. So again, we do view the transaction as positive from a business risk perspective. It's modestly leveraging. We did not change our rating on Conoco. We left it unchanged at A- with a stable outlook.
So Hess shareholders approved the deal with Chevron, but not exactly in the clear just yet. So what comes next here, Karen?
I will say that you're right. I mean, it was a good move that the Hess shareholders approved the deal. There was a little bit of uncertainty whether or not that would go through. There is still one major hurdle left to clear, which is the arbitration with Exxon regarding the stake in Guyana. We had known about the right of first refusal for the Guyana assets, but no one paid it much attention. It seemed like everyone was in agreement in terms of how this deal would proceed. And then a few weeks later, Exxon mentioned that there were some questions. They wanted to make sure they were, exercising their fiduciary duty to get what they could from this asset. And it seemed like the companies, tried to have negotiations, but that did not come to any results. And now they've gone to arbitration. Exxon is claiming that it has a right of first refusal to buy the 30% stake that Hess has in the Guyana assets. Obviously, Chevron, that is a main part of the reason that Chevron is buying Hess. So I don't think, the deal probably will not go through without that stake being, in the part of the acquisition. And now it's up to the hands of the court, and we'll see what happens with arbitration. In terms of timing, we had thought, maybe closing in mid-year, but it looks like that's pushed out now to year end. And then we've even heard it could spill over into 2025.
Would you say this is a good move?
It's we thought it was favorable from a business risk perspective for Chevron. It does kind of deepen their inventory, lengthens their growth runway, as well as lowers, emissions from assets like Guyana and the Gulf of Mexico. So it was a good transaction from the business side, a little leveraging, but we think that would come down over time. We did not, however, didn't change the rating on Chevron, still AA- with a stable outlook. And so, while it was good, it wasn't enough to move the rating up.
Any concerns at all?
The main concern is going to be the timing of this deal. The longer we wait, the longer, it will take for them to integrate and, get the cost savings that they're hoping to achieve from the combination. So it's just going to be, the main risk is the timing and, of course, whether or not it goes through at all. There is also, regulatory issues with the FTC, but I think that's, kind of largely played out. Exxon got its deal done with Pioneer after going through, pretty deep regulatory scrutiny from the FTC. And so now that's been done, I think, this one and other deals will probably have an easier time getting approved.
All right. Thank you very much for your time today, Karen.
Thank you, Don. Have a good day.
And American Airline stock making big moves today, not in a good way though, dropped nearly 14%. And this is coming after giving a downbeat outlook on the carrier, cut its earnings forecast for the current quarter. So despite the fact that there's robust demand for travel, CEO Robert Isom blamed the changes to the airline sales strategy for softer bookings. Under that strategy, American sought to rework its contracts with corporate travel agencies and customers, cutting perks and discounts. It also tried to compel customers to make bookings directly with the airline instead of through third-party sites and travel agencies. Isom today promised a reset of the strategy. Listen.
We've used a lot of sticks. We've got to put some more carrots in place and make sure that our product is available wherever customers want to buy it. Our agency and corporate relationships, we've made a lot of changes. We need to make it easier to participate in our programs and easier to do business with American Airlines.
Now, on Tuesday, the company announced its chief commercial officer, Vasu Raja, is leaving. Raja was spearheading the new sales and distribution strategy. Analysts at JP Morgan says American's weak guidance speaks to more of its flawed initial forecast rather than any major shifts in passenger demand. And BlackRock's iShares Bitcoin Trust has become the world's largest fund for the cryptocurrency. It is racking up nearly $20 billion in total assets since listing in the US in January, and this is according to Bloomberg. The exchange-traded fund overtook Grayscale Bitcoin Trust. And this is based on comparing how much tokens are held in each fund. U.S. regulators approved the launch of 9 new ETFs in January. Grayscale Bitcoin Trust is the first publicly traded Bitcoin fund, according to its website. But market analysts have been watching if BlackRock can catch up and surpass Grayscale. Grayscale's fees is 1.5% higher than the average of about 0.25% charged by its new rivals, including Fidelity Investments and ARK Investments. Meanwhile, the world is in serious debt, according to the Institute of International Finance. Global debt has grown to $315 trillion this year. Now, more than half of that comes from mature economies. Japan and the US are contributing to most of that. IMF noted pressure from stubborn inflation, rising trade friction, and geopolitical tensions as risks to global funds. Now, of the $315 trillion, household debt accounts for about $59 trillion. This includes mortgages, credit cards, and student loans. Business debt for operations and growth is about $164 trillion. And a critical day in the Trump New York trial. The jury has just ended their first day of deliberations and will come back tomorrow. Now, a verdict could come tomorrow or within days. The former president again calls it a rigged trial.
Mother Teresa could not beat these charges. These charges are rigged. The whole thing is rigged. What's happening here is weaponization at a level that nobody's seen before, ever. And it shouldn't be allowed to happen. So I'll stay around here. This is 5 weeks. Then 5 weeks of really essentially not campaigning.
In the morning, Justice Juan Merchan gave the jury instructions before they start deliberating. The jury has to reach a unanimous verdict on each account of the 34 charges. Now, here are some potential scenarios. For example, the jury could fully acquit Trump on all counts. That's meaning case closed here. Or they could convict Trump on all accounts, or just some accounts, but not the others. Also, we could have a hung jury where the jurors can't agree. That means Manhattan prosecutors could retry the case if they chose to. And just earlier in the afternoon, the judge said the jury has requested testimony from key witnesses / former Trump lawyer Michael Cohen and David Pecker, publisher of National Enquirer, who also testified in the case. We'll have more for you in Capitol Report at 5 o'clock. Taking a short break now, but coming after, a major Chinese competitor of Tesla unveils the new plug-in hybrid car. It says the car has a driving range of 1,300 miles. Also, Walgreens slashing prices on over 1,500 items. It's trying to lure back shoppers hit by inflation. That and more coming up after a short break. Welcome back. Let's go through some quick headlines here for today. A labor union representing tens of thousands of Samsung Electronics workers announced today that it will go on strike next week in what reportedly is the first such walkout at the South Korean tech firm. The union asked workers to hold a one-day strike and use their paid leave on June 7th. And there is nothing left to extract from a merger discussion between mining company BHP Group and rival Anglo-American. BHP has walked away from its $49 billion takeover plan that it had been working on for 6 weeks. This came after Anglo-American rejected a last-ditch request for more time. And a warning for Nissan owners with older models. The National Highway Traffic Safety Administration says nearly 84,000 older Nissan vehicles in the U.S. have unrepaired Takata airbags. Nissan says those owners should stop driving the car immediately until the recalled airbag is replaced. Next up, school bus upgrades. The White House is awarding more than 500 school districts with nearly $900 million. And the funds will be to replace thousands of aging gas-fueled school buses with cleaner, mainly electric models. All right, some China-related stories here. The country's electric vehicle maker BYD unveiled the latest version of a plug-in hybrid technology that boasts a driving range of more than 1,306 miles. BYD's chairman unveiled the fifth generation of the hybrid technology that achieves a record low fuel consumption of about 2/3 of a gallon per mile on depleted batteries. With a fully charged battery, on the other hand, and a full tank, the technology can ensure a driving range of approximately from New York all the way to Miami. Though globally, BYD is still trailing behind in terms of sales to multi-branded automakers, that's including Toyota, Volkswagen, General Motors, and Stellantis. Meanwhile, China's largest ride-hailing company has reported a first quarter net loss, and this comes after 2 quarters of profit. DiDi Global largely attributed the loss to a fall in investment income from Chinese electric vehicle maker XPeng. The company has about a 3% stake in XPeng from a sale last year. Excluding those losses and other expenses, DiDi's adjusted net income for the quarter was about $190 million. And revenue for the quarter increased to $6 billion from a year earlier. Didi generates most of its revenue at home, but also has a significant presence in Brazil and Mexico. Meanwhile, two young giant pandas are preparing for an overseas journey from China to the United States. China said that it will be sending the two pandas to Washington by the end of the year. The Smithsonian's National Zoo said in a statement that it will welcome Bao Li and Qing Bao. The zoo had just returned three bears amid heightened tensions, but the announcement follows increased engagement between Washington and Beijing and puts ties on potentially steadier footing. The Chinese Communist Party has long used pandas as animal ambassadors to exert soft power, sending them as rewards for siding with Beijing and bringing them back home as punishment. Staying with China, Beijing says it wants no more conspicuous flaunting of wealth on social media. Now, rich Chinese social media influencer accounts are being banned. NTD's Sean Marshall takes a look at some of them.
No more showing off allowed for the wealthy class in China. The CCP is banning extravagant social media influencers that like to showcase their fancy cars, pricey clothes, and luxurious mansions. One of the most popular influencers is someone known as the Kim Kardashian of Chinese social media. Wang Hongquanqing had a social media account of over 4 million followers taken down. Wang is said to never go out unless he is wearing an outfit and jewels worth at least $1.4 million. In April, the Cyberspace Administration of China said it would target influencers that are deliberately showcasing a lavish lifestyle built on wealth.
Digital governance, which essentially includes three things: AI, social media, or data more broadly, and very specifically crypto and digital assets. And historically, there has been regulation around crypto and digital assets in the last couple of years. Data always had regulation around privacy. It's gotten stronger.
Wang's Douyin account, the Chinese equivalent of TikTok, became inaccessible to his 4.3 million followers. Searches yielded an error message citing its blockage due to violations of Douyin's community guidelines. Chinese authorities have a history of regulating the internet, which is extensively censored in China to address social trends deemed undesirable. In 2022, officials introduced a code of conduct for live stream personalities, forbidding them from showcasing or excessively promoting luxury items, jewelry, cash, and other assets. Sean Marshall, NTD News.
And back here in the United States, over 4 million chickens must be killed. Iowa officials determined this after detecting signs of bird flu. Officials say the risk to public health, though, is low. Here's the story.
Over 4 million chickens in Iowa will have to be killed after officials detected signs of bird flu, deadly and highly infectious for birds. Officials say the risk to public human health is currently low.
The culling of the chickens is not about humans. The culling of the chickens is about protecting the chicken industry.
Dr. Robert Malone says they don't want the disease to spread to animals in other states. Only 3 human beings have reportedly caught the bird flu in the U.S., and none experienced serious health problems. Malone says chicken culling is a decades-old policy. He believes it's debatable whether it's the best policy, but he does think it's defensible. He also says it doesn't hurt farmers too much.
They usually have insurance in case this happens. So in the short term, what it's going to do is reduce availability. It's going to make it harder to get chicken in some regions. But the chicken industry is geographically dispersed.
Bird flu is, however, battering the industry. The disease has annihilated over 92 million birds since last February, leading to rising egg and chicken prices.
And Walgreens is slashing prices to lure back inflation-weary shoppers turned off by high prices. Today, Walgreens announced that it is cutting prices on over 1,500 items online and at its stores. The price cuts apply to both name brands and as well as store brands. Walgreens is joining other big retailers like Walmart, for example, and Target and Amazon that have also lowered prices. This is coming after retailers hiked up prices as inflation spiked in recent years, but now consumers aren't shopping like they used to. High prices are forcing them to look for deals and choose between wants versus needs. So retailers are now trying to rev up spending by lowering prices. They hope that will encourage consumers to spend more freely on both essential items like food and more discretionary items like clothes and decor. Meanwhile, Dollar Tree is moving into dozens of closed 99-cents only stores. The company announced it acquired leases for 170 99-cents only stores in Arizona, California, Nevada, and Texas. 99-cents only filed for bankruptcy in April and closed all of its stores. Dollar Tree is planning to reopen these stores with its own products under its branding this fall. And after favoring sports, academics, and other pursuits the last few summers, teens are headed back to work and inflation may be a key driver. In this next story, let's take a look at why some teens, and more of them, will pick up more summer jobs and how to start the search.
Teens are expected to job hunt in a big way this summer, and some key sectors will welcome the help.
Jobs that teens typically usually fill, recreation, food service, a lot of those employers in those sectors are having a hard time filling those roles. And so in some ways, the teen summer surge couldn't come at a better time.
A report by outplacement firm Challenger Gray and Christmas forecasts teens will see an additional 1.3 million jobs in May, June, and July. This, as the Bureau of Labor Statistics showed more than 5.8 million teens between age 16 and 19 employed during the month of April, an increase from about 5.7 million the year prior. Challenger says part of the push is the squeeze of inflation on teens and families. Mark Hamrick, senior economic analyst at Bankrate, says the job market is in their favor.
The good news here is that the job market remains strong. There is more demand for workers than there is supply of workers.
Aaron Terrazas, chief economist at Glassdoor, says employers realize teens won't come to interviews with lengthy resumes, but a teen does need to show up ready to work.
They do want to see is some signal of persistence, dedication, and that this employee is going to be a reliable worker.
And Hamrick says the financial lessons of a summer job can go beyond the workplace.
The experience, not to mention the income that's associated with real work, is something that is very meaningful and important for the development of all young people.
All right, and that's all the stories we have for you today. Thank you very much for watching. If you have any feedback for the episode, please feel free to let me know. You can email us at business@ntd.com or leave a comment online. I do read them for every episode. And as I always say, business matters. See you tomorrow.